Okay, so I like to be prompt. People can listen to the recording and catch up if they're a couple minutes late. But the first thing I would do is just want to do a little admin here. There's a delay between my voice and my typing sometimes, and also with me responding to the chat. So if things seem like 5 or 7 seconds off, or it's 10 seconds before I respond back, it's because of the latency in all the systems. And what I'll do is I'm going to go through my presentation, but I like to make it interactive and answer questions. So if you have questions, use the chat function here, and I'll see it. And just bear with me when I take a pause in my presentation. I'll answer your question. I'm looking at two different PCs, so I type with one PC and I'm working from the other one, so you can so I guess split my time here. Hey Gino, how you doing, buddy? You feeling good? Is it snowing up there yet in Maine? Okay, so let me get rolling here. I want to do first is I want to show you my setup, and so you can understand that, because what I do is we use our indicators, and then we use the futures tools that are given to us to help you to trade more effectively. So when you look at a futures chart, is that if you notice here, is that I have these green bars here, I got this strange white line, I got these purple lines, and then I got these strange lines here and here, and then I got these dotted lines. So that all frames the trading day. And what I'm going to do is I'm going to show you those formulas now, so that you can get those set up. And the first one I want to show you here is, this is volume profile. That's the green stuff here. If you've been on my presentations before, most of you should have that set up. And if you need to get up to speed on volume profile, we have training classes that talk about how to do that. And if you bought the DTMM system before or buy it now, that course comes with the package. Okay, so that's not going to be my purpose today to explain all these things, other than I'll explain to you when I see a trade as we go through it. But you want to have the volume profile set up, and then what you want to also have set up is you want to have pivot points set up. And the pivot points are for day. You don't need the weeklies. Okay, and then what you want to have set up is you want to have set up what's called VWAP, which is volume weighted average price. And then you want to set up two sets of them. You want to have 2 standard deviation, and you want to have 1 standard deviation. And that frames the day. And what VWAP is the distance. The VWAP itself is the average price where the most volume is falling. And so when you're 1 standard deviation and 2 standard deviations out, it kind of forms a like magnetic, a rejector when it hits those areas that want to come back towards the center. Okay, and so I like to look at 1 and 2, because sometimes you'll see the market get trapped between the 2 standard deviations, and you may not have to necessarily wait on one of my signals to be able to say, hey, look, this thing's bouncing. And oil did it after lunchtime. It just kind of stayed between the minus SD2 and the minus SD1. And for those who like to scalp those small trades, that's a viable strategy. And for those who use multiple contracts, profits can add up. So that's why it's good to know how to use VWAP. Now, something I haven't shown you before, but it's really helpful, is a thing called standard deviation channels. This is kind of akin to the moving VWAP, if you will, that you see in other packages, but it comes as straight lines, and really what it's doing, it's framing the movement of price from a center point at a given look back period. And when we have a 5-minute channel, it's going to be it's going to look back 5 days. If it's 15 minutes, it's 5 days. If it's an hour, I'm looking back 20 days. If it's a daily, I'm looking back one year. And so that helps frame, another way of framing, and it's a really good, what I call swing reversal area. So if you see it touching one of these lines, and I'll open it up so you can see how it's set up. So you're looking at deviation 1, you're having a length of 20 on this, okay? You can set your colors and your size as you wish. And so I set up 2 pairs of them, 1 standard deviation, 2 standard deviations, and it really helps you see areas of likely reversal areas, or likely areas where price may stop. And so it's a good way also to frame it. You have to realize when you're trading in the market in general, you have very few days where the market's just going to run away from you. There's 2 competing sets of algos out there in general. You have one that's pushing a direction, and you have one pushing back towards the center. And then you have the hedge funds and the institutional money looking for best price. So they're always looking to, if it's dropping too far and they're accumulating, they're going to accumulate that back towards the center line or the VWAP line. And that way, that's how they get measured by their clients, is how well they buy and sell against the VWAP. So that's why you see it a lot of times coming back to VWAP during the day, and very, very rarely do you see it falling out of place. Those are very rare days. I think they're less than 4 or 5% of the days where the market will just fall out of all these ranges. And that's why people get trapped, because mentally people think, hey, it's going up, it's going to go up forever. It's going down, oh, it's going to crash. And they count on that because they reverse you on these support areas. Okay, and then the one that we're going to talk about more today is the DTM version 7. That should be up on the dashboard now so that you guys could pull it down. And then the only thing you want to make sure that it's set up with is make sure this is 25 and 5 in here. And then I have arrow 2 green, arrow 2 red, arrow 5 red, blue, dark blue, and arrow 5 dark gray. Okay, and then I'm just going to stop. Make sure you guys are tracking with me. So can I get a thumbs up, thumbs down so far? Because I don't see any questions or anybody really responding on the chat. Okay, I guess people are on. I see things moving, so I'm just going to continue on here. And then the last one is on the bottom, is I have a stochastic slow setup with 50 for K, 15 for D. And then that way it kind of tells me the climate, and I'll get to that when we talk about the trading. So you need to have all these set up, okay? And then once you have it all set up, it's going to look like my charts here. Now the other thing too, if you notice in the thing, we turn off the money machine basically from 3 o'clock my time, which would be 6 o'clock, and then until about 9 o'clock when the Japanese markets or Asian markets are really starting to go into full swing, or the last half into the close in the European Open. There's just no volume, and it'll just be a chop fest. So it's not really worth trading it. So we just turn the arrows off. And if you want to free ball it, you're welcome to do it, but you don't need to. And so the other thing that I do too is that, and part of it's because where I live. The other part of it is that there's too many reversals. Is that I don't really like to trade before a futures market is really open. Now some people do, and that's fine, and you can make money at it. It's just that typically the trading range is tighter, and you really need to be scalping, and you know, sometimes you'll get a good run. Some nights are better than others. I just don't trade it. So you can use the signal, see if it works for you. I tend to wait, and for like the oil market, I don't really like to touch it until looking at it till like about 5:30 or so, and then I'll make a decision what I want to do. But if I see an opportunity from that point, a good setup, I'll start trading it. And after 6 o'clock for sure, because the oil market is definitely open for business. And at 6:30, the regular trading hour is open, and I trade NASDAQ. I don't trade the ES at all. Okay, so and how I trade this is really quite simple. Is that, you know, up arrows are good, down arrows are sell. Okay, so if you got started, you know, at 5:30 in the morning here, you know, you're looking at the first arrow here is a blue arrow, which is the primary arrow. That's why I have them in different colors, and I'll explain those as they come up. So this arrow is telling me that there's a change reversal that is coming. And the nice thing about it too is that you're getting a buy signal right on a pivot, and that's usually a pretty good sign. And you know, you could take that trade, and I do one of two things. It's really up to you, especially if you're just getting started. You know, there's what's called average true ranges. You know, very rarely you're going to get these huge moves. So, you know, if you want to start off with saying, you know, hey, if I get 10 cents, that's good, or I'm going to trail it, or if I get 10 cents, I won't let it go below 10 cents. Those kind of things, those are all good strategies. My signals aren't this isn't an auto trade system where, oh, I'm going to hold it till I get the other arrow. You know, you don't have to wait for the reversal, you know, but you can, but you don't have to wait for it. And sometimes I do, sometimes I trail it, sometimes I'll trail it with a trigger. It all depends on how much I'm paying attention to the trade or how much money I want to make, you know. And I work for the signal, but this is how I make my living. So I have to make a certain amount of money every day trading these futures, and I make sure that I'm coveting my assets here and making sure I make my day, and then I can be pickier as the day goes on what trades I will or won't take. And you know, for me, if I can make $300 to $500 a day, I'm delighted. And if I make more, that's even greater. And like I said, but once I start making good money, I may just shut it down for the day, and just so I don't give anything back by over trading. But see, the blue signal here is a primary trade. That's saying, hey, you know, get long. And the thing is, what people do a lot of times too is they try to overthink the trade. Is that for me, I trust these enough that I'm going to take the trade, and then you get a push here. And just so you know too, we're looking at this in hindsight. This blue arrow may have hit anywhere in this bar, so I don't have this one directly in front of me, so I couldn't tell you when it was taken. And the same will go here too. It could be anywhere in this bar here. So you're going to get, you know, a move here. You know, you're talking as a high of 50.39, you know, and a low here 50.38. You're not going to catch the bottom or top, but there's probably 5 or 6 cents in here. Now, I didn't take this trade. I'm just pointing this trade out to you. But I did take this trade, okay? And then it comes to an important thing here is I got out before here because one of the tips and tricks that I want to share with you is this black line here is the VWAP. Okay, it's the center of gravity. It's home base. It's kick the can. And so when it runs back to here, it's usually going to stall out unless there's a bigger move coming. And still it may stall out for a few bars before it either reverses or drops out. So, you know, you're going to take your profit in here. Okay. And then I took this trade here. And even though the news was coming out, I knew that oil's been pretty washed out. And the day before they sold it down. And that's just another thing that I learned from experience. And so I trusted that signal. And so I took that signal and I caught this move higher. And now I didn't get out here, okay? But when it drifted back to the pivot, I did get out. That's another tip or trick to think about too, is that it pushed through. I didn't know how high this was going. Sometimes oil will just go up $1. But as soon as it came back to the pivot, I feared the trade was over. And I was right. So I closed the trade. And then this next thing happened here, which is this smaller arrow. And I got a smaller red and a smaller green. This is what we call the slingshot. And really what this is telling us, it's telling us that this directional move that was made is probably overdone. It's the distance it traveled was too far too fast. And it's indicating that if it doesn't reverse, it's probably going to pause. Okay? And so you got this trade here that says, hey, you know, this is too far too fast. Now, I didn't take this trade because I was already out, but if I pushed up here, I would have took this trade. All right, but I did take this trade here because I got a sell signal. And what I do, I dropped it into the pivot, into the VWAP. Okay, and then took that trade short and made myself 8 cents. And then I caught this trade here, and then I caught this trade here, and I didn't make any money on that trade. And that's the other thing you have to understand. You're going to get chopped and washed a lot. Okay, that's just the nature of trading. Is, you know, if you're getting 60 to 70% positive trades, you're doing fantastic. Okay, so I didn't care. I got this. I reversed. He took it short. Okay, now and then it just dropped through VWAP here. Okay, and I got out. And then it just fell down to the floor here. Sometimes that happens. And so, you know, you can run this trade all the way down to the arrow, but, you know, I scalped. I was making money. I made my day in oil already, so I didn't want to be too smart. But it fell all the way through, and then see it said too far, too fast. Now, I went long here, okay, and then it dropped right through, stopped out, because this area here was not, you don't have to take it long. It's a suggestion. But what happens if you take a small arrow long or a small arrow short and it goes against you, just close the trade. But when it hit here, and what's called the low or the high you see here, that's a 5-day low for me or a 5-day high. I always take that fade. So if I get a high like we had in NASDAQ today, you short it. If you get a low like we had in oil today, you go long it. Okay, and it pushed up. And then once this trade hit here, the day trading's over for the day. Because now you're past 9:30 and you're in the low volatility zone. And you can only really get messed up from here. And it just did nothing the rest of the day, and it's still doing nothing now. So I just wanted to stop there and just to show you that's kind of how I trade it. And so I used the bumpers to make my trade. Now I could have been bold and just stayed with it. I could have did a trailing. I could have did a profit. You know, I'm just pointing out what I did, but you could just follow the signals too if you want to. All right, and take them and reverse them as you can, and you'd have did really well today on oil. And before I get into NASDAQ, I wanted to see if you guys have any questions or if this is really self-explanatory. Okay, so I trade one of four things. So I trade NASDAQ, oil, gasoline, and natural gas. Now, I have a swing trade on for natural gas, so I wasn't even looking at the signals. I bought at the 5-day low yesterday and the day before. I think I pointed that out to those of you who follow me, and I'm holding on, and I'm looking for a seasonal move here. So I'm gonna manage my natural gas trade with size. So I'm 3 long now, and I'll go from 3 to 1, but always have something long in the trade, and try to work my average where I think natural gas, just for you guys' sake, once it gets over 301, it's probably going to go to 324 area. And so, I mean, that trade alone is worth a whole month to me. So I'm going to manage that through swing trading, and I'm not going to try to day trade the natural gas. Some days I do, but I don't. And gasoline's a really good one to day trade. My only caution is you might want to step this down to a 3-minute, because it really moves and it's really leveraged. But those of you probably are on here too and see me trade the gasoline trade. It's a fun trade, especially if you catch these moves where it's sitting on a green line or a red line. Then you kind of get a little bit more confident. Okay. Now, I didn't trade NASDAQ today, but some people in my group did. Now, the thing about NASDAQ too is, and you don't have to be you don't have to be robotic here. It's okay to use your brain when you're trading. Is that we know certain things have been happening. Until they change, you just go with the flow. So what we've been seeing is that the market will do one of two things. NASDAQ will either flush at the open for reasons unknown, and you get a buy signal, and they're using it to squeeze short higher. Or it comes out of the gate like a rocket and doesn't look back till about 2 p.m. Okay? So you kind of look for those two things. Now, I didn't even look at it until some of the people in the room were asking me questions on if I should short, which I'll talk to you about in a second. But if you would have took this trade, I would have simply followed all the arrows from the open. You would have gotten in as soon as this thing started to plunge below VWAP. You wouldn't even have waited for the arrow. Your instinct is to, okay, there looks like they're going to push it down. But you don't get married to a sell-off for NASDAQ. I can't tell you how many times I've taken a winner and turned it into a major loser by being stubborn on not even following my own signals, thinking, hey, the crash is coming. Oh, it just went back up a little bit, and then have it rocket up to, pivot 2. So you just have to know that the probabilities of a crash is not on your side. The probabilities it's going to go to VWAP is more likely on your side. So as soon as you saw a buy signal, you should have just bought the NASDAQ and run it up till these signals are saying, hey, you probably are thinking about switching out. Now, I wouldn't have shorted it, because once you're over VWAP for NASDAQ for the day, it's unlikely that you're going to get a big sell-off. But when you get an arrow at the VWAP, you got to take the trade. And then it's telling you here you're at a minus SD2. That's another warning zone. Don't press your luck. You're pushing down at the volatility levels 2 standard deviations. Sorry about that. I don't know what I did here. I squeezed it here. You're taking a 2 standard deviations below the VWAP for the day. And there's algorithms that look for this. As soon as they see the selling abating, they're going to flip it. And see, my move too far too fast arrow hit. And there's a lot of traders they'll just take that trade without even thinking about it, saying, I know we're going to go to VWAP. You would have took that trade, you would have been confirmed. And right here alone, you went from 80 to 60.11. Right here is a $600 move right here. Okay, now for me personally, I would have took this trade. I would have got out here because I got these arrows. But as soon as that bull flag broke, I would have jumped back in, and I would have got out here. And I probably wouldn't have took this trade here because I would have been too nervous. But because you already made some really good money. But what happened here was it set itself up for a nice short. And as soon as it broke and took a new high, and you got a sell signal at the same time, you just got to take the short, put a stop loss on top of it, and then just run it down, and you could have ran it all the way down to the SD1 here, and you would have made 200 bucks. It rose up again, you got another sell signal, you could have wrote it down the VWAP and made another $200. So you probably could have made $1,800 trading NASDAQ today just using the signals. You'd have made half that if you were ultra conservative, but you'd have definitely made what I would call the $100,000 a year budget, which is if you do $420 a day every day the market's open, that's $100,000 a year. So it's not out of mind to do it. So I like trading NASDAQ. I was just very interested in energy today, and I was looking for that reversal from yesterday, so that's why I played over there. Plus, sometimes I just get bored trading the same things all the time, so I kind of move around a little bit. You know, I got a swing account, I got a long-term account, and this is what I trade. It's a day trade, so I can stay engaged. And so that's it. And then once you get past 9:30, another thing to note too, and somebody asked me on the blog today, just don't short it after 9:30. Okay. You know, you may catch a move. There's only one exception to that is just probabilities. We're trading probabilities here. You know, there'll be a time when the market will change its tenor, and you'll start seeing sell-offs, and then, you know, multi-day sell-offs, and then, you know, okay, the market's heavy, and so I can do that. But it's not, the market's not acting that way now. So if you get, you know, 9:30, this sell-off here closed off at, this one closed off at 10:30. You know, some people will take this buy signal and ride it into the rest of the day, but just don't short it. The only exception is if it's sitting up here at R2 or SD2, and you get till 2 or 2:30, the oil markets start to close, they may run it back down to VWAP, so you may have a trade there. Okay, but as a general rule, the market's short early and rise later because scared money acts fast. And then volatility falls all during the day. So it's more volatile in the morning, less volatile in the afternoon. And so what happens is when things are less volatile, we know by following the VIX so much, is that you can take more risk. And so the algorithms that are running all these shops now, you know, there's no people running these things anymore. We're the dinosaurs doing this with our own brains, is that the algorithms are saying volatility's falling, I can take more risk, I'm going to buy. And then other algorithms say, hey, they're buying, I'm going to buy. And algorithms say, they're buying, I'm going to buy. And next thing you know, you see this drift up all day that just never stops. And people try to short into that, and it's just a waste of your money. So if you already make your money, our goal is to have money made by lunchtime East Coast time. And be done. Enjoy the rest of your day. You're making enough money. You know, and you take some shots on some double or triple ETFs with some puts. You know, you have your longer term account, and you know you're making money in those accounts. But here, you know, you can have an account less than 10K, and you could trade, you know, multiple contracts of oil or natural gas, and typically one contract NASDAQ, one contract of gasoline, because you need to give yourself room to be wrong. And that's it. And so I just want to kind of point that out to you. And I'm going to show you something here just so you get a sense for scale. Is that what I like to do at night before I go to bed is I like to look at the big picture here and kind of see where everything's sitting. And so like now I'm looking at NASDAQ, and this is the volatility deviations for the last month. And I'm saying, okay, if it gets up to 60.25 area here, then that's likely a reversal area, and there might be an opportunity for a 100 to 150 point move down, or at least a move back down to the point of control. When you look at natural gas, I think that's the one I want to show. Hold on a second. No matter how many times I set this up for auto, it like forgets me. So, see, natural gas was given these. This was not only a 5-day signal, it was a 20-day signal, and it's at the lower end of the range, and so that was a good area. And then let's see here, what else I want to show you. think our gasoline. Just take you 10 minutes to do. See, gasoline was pushing to the bottom of the range. And once it starts climbing these ranges, it's going to climb to here, relax. If it rejects, you can think about it going back to here, going back to here. If it climbs up through this, look for it to go to here, to go to here. And then the other thing too is these, from market profile, you look for these low volume areas here. So this was natural for you to get this buy signal here, is you want to look for it to push all the way up to here, at least to here. So those are the kind of things that you do. And you know, I look at corn, and I look at wheat. It takes 10 minutes of my time, and then I kind of get a sense for what things are doing. So that's how I go about doing it. You know, I try and make this simple. So version 7, we took out some of the signals, and I made it more sensitive to trend change, and re-engaged the slingshot, and so I can make this a little bit, take some of this decision-making nervousness out of your hands, and you know, still set your stops. But as you could see with these trades, that those you know, those reversals off the big arrow are usually pretty good. You may not make money on them, but there's the likelihood of you having a big loss is very, very remote, because the signal itself looks for that trend change, and it will just reverse itself, just like I showed you with oil, you know, earlier, when we got to that point where it was chopping, you know. And see here, oil's starting to set up too. I'm looking for a low right here, and then I'm looking for it to push, push, push. But when I talked about earlier today, when you got this trade here, where it was this, this, and this, you know, that's so what? You didn't make any money, you lost $20, you lost $30, whatever. But what you're playing for is the bigger move. But it's not likely you're going to take the arrow and have it, like this arrow hitting here, you get it down. It's not likely it's going to do this and go this way. Not before the next arrow or two, it's going to correct you out. Okay? So I'm going to stop here and see if you guys have any questions for me, if this made sense to you guys, and see if you guys want to start using it. Thanks, Joe. I think it's I think we're getting it better and better. So can't make it perfect though. Hey, is Eric in there lurking? A creeping. If you own it, just go to your dashboard, and you should be able to see where you could select the download the latest version on the tips and tricks area. If you haven't bought it, just go to the tips and tricks area, look for Day Trading Money Machine, and you can use the promo code October, and we'll give you half the price that's on there to buy it if you're listening in. But if you already own it, just go there and click on the tips or tricks, and you should already show that you're paid, and you should just be able to download it. Do you guys have any other questions for me? Yeah, I'm gonna leave it up tonight, Liz, and I'll ask the admin to store it. If you guys have a question, you can just email and ask them, and they can give it to you. Yeah, as soon as it renders, Liz, I'll put it up for tonight. Okay, so look for it in about. I have to leave right now after this, and I won't be back till like 8 my time. But I'll put it back up there and leave it up as a public video. Okay. All right, guys. Well, then, hey, I'll let you guys go. And if you guys have any questions, just send an email. And like I said, I think you'll like it. And it's definitely less cluttered, if you will. So the signals are pretty strong. So I'll see you guys later. Thanks for listening. Have a good one. I'll see you, Gino.